Sell-off pre-market, big bounce pre-market, major bounce. U.S. cash session open 8:30 U.S. Central Time, Chicago time, Globex time. Definitely been buying, so if I get a cross of the fast bands up through the main bands, I will be a buyer. So we're waiting for that signal basically. Don't want to touch anything right out of the open. Market's in a big uptrend. If anything, would be nice to be in as a buyer. So standing by for a long setup. Cross of the fast bands up through. The triangles are just basically showing me there's been an excursion outside of the bands and a reversal candle in the bands area. That's all it's telling me. I don't take trades at the triangles specifically. I'd rather go for the cross of the bands through now that we have the U.S. cash session open and I'm not in the first minute or two. No need to jump in a trade then. Let the market play out. This is basically the non-recalculating iGrid bands, the dual bands. And it's giving us a framing up of the price action and defining what is the dynamic range of the current market. So I don't really ever necessarily have to pay any attention to levels or anything. I can just watch the ongoing play out of the dynamic range of the market, on whatever instrument or time frame that I'm trading on. So with the dual bands, I can basically I'm using grid bars. I could use grid Renko. I could use range bars, volume bars, tick bars. I could use time-based charts. I could use Ninja Renko, Unirenko, Joe Schmo's Renko. It doesn't make any difference. The bands don't care what kind of bar you use. And basically what I'm going to try to do is identify either short setups that I'm willing to take to play from one side of the dynamic range to the other, or long setups to play from one side of the dynamic range to the other. Or at least if I get in a trade and gets to mid-band, scrubs out for a while, then just blip out, wait for a new setup. Okay, we're starting to get some hook here in the indicator, and that's basically what I'm looking for coming up on what could potentially be a cross. I'll be a buyer in the market. I'll put a sell stop just below most recent price pivot. That way if the market comes down, it'll blip me out. And we're in the trade, so now I'll basically see what plays out here. We'll stand by and come back and take a look. We did get the cross right now, so I'm in pretty close to the price I would have been in at the cross. So now that the market major uptrend has been in play, and now I got me a buy set up. So there we go, standing by to see what we get. One thing I was going to mention, I do have, I am paying attention to this pivot area. I'd like to see a push above it. There's another level just above. If we press outside that bands and get to that level, I'll call that good on the first trade. And if it's pushing, but I'm getting some red downward pointing triangles, that can kind of help me that, hey, this thing, we're starting to get some reversal candles. It might mean revert and come right back inside the band. So if you're long, either lock in profits. We're about 1-to-1, a little over 1-to-1, a reward to risk. So do I really need to have all this risk on right now? Nah, I can take it out. So we're in a free trade. It's the first trade of the day. It's real easy. It's going to push or it's not. Another big thing I pay attention to, I always like my entries when I'm long to be at the mid-band or below. That's where the value is to be a buyer. If I'm going to be a seller, I want it to be at the mid-band or above. So I don't want to be buying above the mid-band on a long signal. If I am, in my mind, I'm kind of chasing price. At least when I get up on what I would consider, not like hyper scalping time frames. I'm not on a hyper scalping time frame. I'm actually on a little bit higher time frame than I typically trade. But when there's been a big down move and a big up move, I kind of want to stand back. Okay, there we're getting the press above. I'm going to move my stop up to mid band. See that little mid band? So I can passively stop. Now I'm in the area where I could just blip out of the trade and call it good. But there's a level just above, and I'm going to see if we can press a little bit higher. Okay, on a 150K account, I typically like to, there we go. I like to get at least 710 a day. So I just looked up, I'm like, oh, wait a minute, P&L is already up over 700. So I just need to blip that out and call it good. So big up move, got a buy signal. Did I have to sit here and hyperventilate or get out my calculator and figure out with 15 different mathematical calculations if the bands were recalculating or not? Sometimes these pushbacks on different types of indicators are kind of vacant of any reality. So anyhow, we got the push. Now we've come up. There's a level I see off where we've just now come up to that level. So I'll call that good. And now that we've done a level sweep, I would definitely be willing to take a shot at any short from up here. So we'll stand by and see if we get another setup. Okay, we're about to get some hook on the bands here. We've gotten a lower pivot high with diamonds. See what we get here. We've already done a level sweep. So this is an area price. I have no problem being a seller. You can see we're getting a little bit of cyclical activity right at the high. So usually when that happens, you're just at the point you're ready to get a push for a breakout run, or it's just going to roll over and basically fall over. So if I can get a hook on here, if we start getting, and you can see there's a little bit of buyer control so far hanging on in here. So if that breaks, we get a hook, that would be an area I'd have no problem being a seller. So we're getting a lot of reversal candles, meaning we're getting candles that are starting to reverse with wicks back in alignment with the potential of a mean reversion event. And usually what will happen, like on a little pullback to the prior high, so let's say get a little pullback to the prior high, you'll usually come right around mid-band. So if you get in the trade, it'll come around mid-band stalled, and then it'll hook and go up, then just let go of it and wait for another setup. So right now we're getting that cyclical grind upward on the bands, or on price, as the market's looking for a potential reversal. Okay, if I can get dual hooks, I like this area price to be a seller, and I'd want to be a seller. I don't want it to be all the way down at mid-band when I'm a seller. Okay, we've lifted a bit. I'm going to sell in here. I'm going to put in a buy stop. And I'm going to put it right above the most recent price pivot. That's all the risk I want to take. Now, typically, if I'm already over, I'm at around 710 at the day or right about thereabouts, I'm one and done, and I'm done on the day. But I want to work a short setup. It's an area price I like, and I'm just trying to demonstrate, kind of what I'm looking at when I'm working the dual bands trades. Now you can see we're getting very close, and right there we just are getting the cross. A little bit scrubby in here, a lot of cyclical action, but that's okay. If we get to mid-band, get a push through mid-band, I'll move my stop to break-even plus. So 1-to-1, like 1.2 reward, 1.3 reward to 1 unit of risk is, the band area, the mid-band. I always kind of pay attention to the mid-band. The mid-band is likely where a little pullback could reverse and lift again if we get secondary push. Because you got to remember, this baby's been long all morning. Lucky we got a pullback, then now we get lift. And so anyhow, very, very close. Okay, I'm going to call that good. We'll go break even. We'll go to about the 392s, lock in low profit. If it bounces, then I'm out of here and I'm way over a goal on the day. On a 300K account, I'd be going for at least 1,100 a day, at least. Okay, so the area I'm looking at is any push to the other side of the bands. That's the strike zone. Any push in that area, I go from passive management because I'm in a protected trade to active management. I'm watching. I start getting a bunch of reversal candles. I start seeing the fast bands hooking, both the upper and the lower. I'm out of there, got a hit. And remember, the amount of average return you make playing ping pong from one side of the bands to the other is all proportional to your time frame. So if I'm on a really low time frame, the bands to bands, if you get a full run from one side to the other, is typically X amount distance and points. I like this because I can play a little bit smaller position size but get bigger hits and make the money that way versus then having to play a bunch of back and forth in a lower time frame. But in the end, it's up to you. Okay, we're getting a little bit of grind down. I'm going to move this down just a little bit, just above this little pivot, just to lock in more because I want to make sure I keep my 710 plus on a typical 150K, like a TPT account or some other type account. And if it blips me out, I'm like, okay, I took another shot, didn't cost me anything, and I'm done for the day. So that's the strike zone, though, right there. And when I have a trade go past the mid-band, no way in heck do I want it to come back up and go beyond my entry price and, give any of that back. I just don't have to. Mid-band, if it can't break and run, wait for the next setup. Now, if this gets a push down near the lower bands, I'm going to move this to the mid-band. That's more of an active management. I could just leave this at, break even plus and just let it ride out. It's either going to blip me out and I'm not going to lose anything, or it's going to get to the other side of the bands. And you never know. It could have a big catastrophic, a big, huge linear bar down. So when I'm short, I frequently, and you got to be careful when you're trading a prop account, if this suddenly goes limit down and you're stuck in trades, it could happen on some horrible news somewhere. You got to be careful of that so you don't get caught. So that's the potential that's there. So anyhow, okay, now I'm going to go to mid-band just to make sure I lock in some additional profit. And I'm way over daily goal on 150K account. So, and again, I was using 3 micros. I never trade full NQ on a 150K account. I really don't need to. With a very small amount of micros and the right time frame, you should be very effective just trading, with micros. Now, if you really get dialed in on a setup on a particular time frame, you could maybe just trade 1 NQ on a 150K account. But why? Why would you need to, when you're just playing bands to bands, side to side, ping pong? Now, here's the first area of potential support. We had buyers. This is all buying that came right out of the open. So all the initial buying is right here. If this presses lower and all those buyers out of the open let go, you're going to get a little bit of a whoosh movement down, and there's some other next level of support lower, and then a big one on the big. We had a big sell-off and a big spike. That would be kind of like a huge level for this particular trade day. Okay, we got the bands pointing down, prices coming down. I start seeing hook on both the fast bands. That would be a time to think about getting out. I am in the strike zone, so I think I'm going to move and lock in more profit right on the top of the fast bands. So now I've locked in not quite 2 units of reward for the initial unit of risk, or maybe I'm right about there. Let's lock in that. Okay, now that we're outside of the bands, I'm just going to go right into these recent pivots, and I'm just going to march it right down. I'm just going to keep marching it right down. And if I get a big push, then I'm going to take this down to the bottom of the green band. And let's see, if we get to 1,500, I'm going to hit the close button, and we'll call that good. And voila. So 1491 after we got blipped out. 2 trades, a long out of the open after a big up move. We did get a pullback and lift. They grinded. They did clean out a level. I think the level was right about there. So we did get a level sweep. No breakout. Rollover, got the cross right in here. And off to the races. So I'll put up more videos in the days ahead. But this is my dual bands of the non-recalculating form and my experimental faves. One nice thing is there's some additional endpoint smoothing that I may add to this to give more options on different smoothing types, final smoothing, for trading these type of setups. So there you have it. If you have any questions, let me pull up the email, info@gridalgo.com. And in the end, just my opinion is the best type of trade setups is systems to use for getting in and just being able to, like on a laptop or something very simple, to just go in and hit your crypto trading, your FX trading, your futures trading, stocks, whatever. Have a setup that can help you see the edges of the market, the dynamic range, and something that is visually efficient. It's very cut and dry. You can see exactly where you should be a buyer and seller, and everything is framed up for you so you can see the trees in the forest, or through the forest, or whatever the saying goes. It helps you see what the market's doing in a way that you can take action and focus on the execution side. Okay, there you have it. That is the iGrid dual bands indicator, and if you have questions, let us know. Thanks.